So there's lots of traditional issues with evaluation. Pure cost is always an important thing. Certainly from an auditor's perspective, there is great inconsistency across entities within the same sectors, and that results then in people questioning the reliability they can place on the statements and whether the figures are meaningful and those sorts of things. Also, obviously, a lack of in-house knowledge and capability, so you rely on people external to do it for you. Unfortunately, I'd have to say the data generally is not well organised. Even for the best local governments, there seems to be a lot of mess with the data. Certainly, there's been a history of very poor or overly simplistic methodologies. That's particularly coming through now with valuations being done under the pre-AASB 13 requirements, and they're still doing it the same way despite significant changes in the standards. Obviously, the standards are constantly changing. Going forward, we also have an issue with the AASB's recently announced a project to look at whether we should be moving to adoption of the IPSAS standards. The difficulty is that the IPSAS standards and the IFRS standards, which we adopt in Australia, up to now have been pretty consistent, but the IPSAS board is now gone in a total different direction, so that's going to have consequences for us going forward in terms of what comes out of that process. Also, I guess, audit expectations growing, and we have the issue with entities try and do stuff themselves, or even if they don't, they might get externals, but the key people involved move on, and every time you come back to do the reval, it becomes a huge exercise. So there's lots of traditional issues. So I guess moving forward, we're in the world of what I would call disruptive technology. So basically, everyone's jobs and roles are changing significantly and are going to change. If you look at disruptive technology, you can see, we've got now development of driverless cars, and in the next 5 years, maybe even shorter, we will see a proliferation of groups like Uber and other entities actually provide services without even drivers. There will be driverless cars. So technology is moving ahead in leaps and bounds. So, and it's the same with valuation. A lot of the stuff, or the intellectual property, I suppose you want to call it that, of valuers is held in their heads, but the reality is, with appropriate technology, you don't necessarily need valuers. You need some of their expertise, but most of the work can be done yourself. And the best analogy I suppose I can give is, back in my younger days, in those days, if you were a small business and you did your accounting, you would record all your transactions probably on something physical like a cash book or Kalamazoo or something like that. So you'd have your transactions, and then at the end of the month, you'd transfer them to a cash book or a journal, and that would obviously take you a fair bit of time. Once you've done that, you'd spend some time working on that, and you'd give your books to the local accountant. Then he or she would work on it and eventually come back and give you your monthly figures, your P&L, do your tax, all that sort of stuff. And that, of course, took more time and cost a lot of money. And then along came a products like MYOB. So basically it was a software system that says, you know what, we can build all that intellectual property into the system. So basically through the system you recorded your transactions, and the system captured all the intellectual property around the technical aspects of the requirements, the legislation, the standards, how to do journals, debits, credits, all that sort of stuff, and said the system can handle that. So the system, once you've entered your transaction, you could then produce automatically by hitting a button your monthly figures and all your other outputs. So this is exactly the same with what's happening with valuation now, or what's going to happen for many entities. And I'll give you a good example of how easy this is. Over the last 15, 16 months, we've been working on a major project with the government of Vanuatu. And basically, the scope of the work was to establish and create an asset framework for the whole of government. It included development of accounting policies, procedures, helping with development of their preparation of financial disclosures, that sort of stuff, but also was primarily to identify their assets and skill their own people up to go out and undertake the valuations. So from a background, the people involved literally had no skills and knowledge. They certainly had no qualifications. In fact, most of the team, finished the equivalent of about grade 10. Some had done some technical stuff like a basic plumbing sort of course or stuff like that, but in terms of formal qualifications, they were non-existent. They certainly had no experience in ever doing anything like this. Their IT skills were particularly limited, to the point where my next visit I'm going over next week, we're actually going to run some advanced Excel courses. Well, they're calling it advanced Excel, we're probably calling it basic Excel for the team as well as for the Auditors General's office. And of course the existing data was, to put it mildly, limited and huge gaps. Typical of a lot of the Pacific Island nations, they had asset registers with whippersnippers and mowers and cars, but the big stuff like multi-billion-dollar IT equipment and roads weren't on there. So we're starting from a point of a group that literally had no capability whatsoever. Here's a nice little photo of the team. This is on the island of Santo in Luganville, where we were talking around development and doing some training and those sorts of things. Here's some quick photos, more training that we were doing to build their capability and out in the field. So you can see we're using some tablets here. So one of the beauties of the FairValue Pro product that we used for this was that we provided the capability for them to go out in the field and collect the data. We trained them up on how to collect the data, and they didn't have to be experts on valuation or accounting standards or anything like that. They just needed to know what they had to collect, and the system was going to look after the rest of it. Even to the point where we were training them, you can see down here, one of the girls there, training them how to use a measuring wheel, and that was basically new technology for them, because in the past they just had tape measures and two people would go and basically walk it out. So in terms of doing your valuations, the component type and component subtype. And you try to build a hierarchy which is going to feed directly into your asset management framework and assist you with that. Because your valuation process shouldn't just be a compliance exercise. It is a fundamental source of key data that should feed into your asset management planning process. So you're going to collect data like dimensions, what the asset is, where it is, what condition it is, that sort of information. So the valuation process should add significant value to the organisation in that and provide a range of efficiencies. So within FairValue Pro, we've built a range of hierarchies, which effectively are the ones that we would use, but councils can use as well to feed directly into their asset management framework. There is also capability within there to customise the data capture. So for example, an entity might say, well, while we're out there and we're looking at our, say, buildings, we also want to know who the manager of the building is, has it got gutters or not, what colour is the roof, I don't know, has it got a view. So just a whole range of any attributes that you want to capture can be customised very quickly within the system and then form part of your data collection screen. One of the other things is that, we're doing this for our financial reporting requirements, and therefore it's important to provide relevant attributes against the assets to enable that reporting to occur. So for example, I could have two buildings, one being an administration building for a council and the other one being a pump station. So whilst they're both buildings, and from an asset management perspective, they're buildings and they will be componentised and assessed consistently, for the purposes of financial reporting, the administration building might end up in the movements reconciliation note under the asset classification of buildings, whereas the pump station may end up under infrastructure. So within the system, it provides the ability to assign an attribute as to whereabouts in the financial statements the figure is going to end up. The other thing with the financial reporting disclosures is that under AASB 13, where you effectively use a different valuation method, that effectively then becomes a different asset class for the purposes of AASB 13, which then feeds into your relevant AASB 13 reconciliation notes and disclosures. So we include within FairValue Pro an attribute there called Fair Value Measurement Asset Class. So a good example would be, I might have, like say, an admin building. I would probably value that using the cost approach. Whereas if I've got a residential building, I would probably value that using the market approach. Therefore, they're different approaches, they're different asset classes. So for the purposes of AASB 13, I need to summarise those figures up based on those asset classes. We also have to feed in the whole range of the assumptions. So they are things like unit rates, indices, locality adjustments, valuers adjustments, and the normal depreciation assumptions like useful life, the split between short life, long life, all that sort of wonderful stuff, which are your depreciation assumptions. So there's a fair bit of work in there, and that's probably the bulk of the work with valuation. But the beauty, I suppose, is that once your file is set up within FairValue Pro, it's there and your framework is established. And councils can either develop their own framework and use their existing framework, or they could just pinch one that we've used typically for local governments. Once the framework is established, you then need to get into your data collection. And the process is pretty straightforward. Obviously, you need to collect the information like the dimensions or quantities, that sort of stuff. You need to record what the asset type and subtype is. And then for each of the components, the component types and subtypes, you need to assign some condition scores, probably take some photos, record GPS, and that sort of stuff. So in the case of the Vanuatu team, basically that's what they've done. So we, with them, facilitated the discussion around what the framework is and worked out what that would be. And they've literally spent the last 5-7 months visiting every island of Vanuatu, capturing all their roads, their infrastructure, their buildings, and recording this data. And that data then has been imported into FairValue Pro. So in terms of the overall project, I mean, this is huge. It's not just one department, this is the whole of government. So Public Works has got airports, they've got roads, they've also got a range of buildings. The Office of Public Service has a range of what they call employee housing. Education is huge with about 3,000 buildings. Health has a similar number. The Office of the Chief Information Officer, they have a huge amount of infrastructure with microwave links, towers, that sort of thing, and they're currently putting in a undersea cable at the moment. The police have some huge, basically Navy sort of boats, and then of course there's the land itself, the Lands Department. So it's been a huge exercise. The results have been amazing. I've got to say I'm really proud of these guys, given that they have absolutely no capability, and in the space of 15 months they have been able to go out and capture every asset and for the first time provide a whole of government valuation. And whilst we have been there to facilitate it, the bulk of the work has been done by the Asset Management Valuation Unit. And it's been able to be done because the software has provided them with the capability. If I sat them down to quiz them about accounting standards and valuation methodology, the eyes would glaze over a fair bit because they just don't have that understanding as yet. And this will take years to build that understanding. But the reality is, because they're able to use the software that includes all the intellectual property, they're in a position where they have effectively produced the valuations themselves and to a very, very high level. So this year we're just finishing off the final valuations at the moment because their financial year is 31 December, and we're about to start a project now of expanding out to the municipal governments, the provincial governments, and the government business enterprises. So it's a huge, huge plus for them. So what I wanted to do was just give you a quick, very, very quick look at what the screens look like and those sorts of things, and so you understand the process. Within the system, obviously there are a range of inbuilt validations. So that's the auditor side in there. That says no matter what you do, if you put crap data in, you're going to get crap out. So we have built a whole range of validations and reports to make sure that from a quality review perspective, you can quickly identify whether the data is clean and accurate to be relied upon. There's a whole range of extensive reporting in terms of the typical range of reports, a whole range of analytical reports, as well as validations, as well as some very specialised reports. And we've got some new stuff coming along with some of the financial reporting stuff. Because it's a SQL database based on cloud, basically you can export anything out of it very quickly into Excel, and then you can then upload that data into existing systems. Moving forward, we intend to build some APIs with the key systems, whether that be, Authority or Tech1 or IT Vision or whoever. We're more than happy to talk to any of them to build those links easily. One of the big savings, I suppose, is when you come to do your desktop update. So let's just say that this year we've done a comprehensive revaluation. When you come along next year, you literally just create a new job, update your indices you want to apply in a table, update for any additions and deletions and changes in condition, and basically hit the button and you've got a new valuation. So the revaluation process can be as simple as, anything from half an hour, probably to maybe 3 or 4 hours. It's all it's going to take. And the beauty is finance can actually control the process. So instead of having to rely on your engineers to go out and do a whole heap of stuff, what they need to do will be minimised, and you will be the ones that are in the seat driving, particularly the depreciation assumptions and those sorts of things, and understand the accounting standards. So it gives control back to finance to control not only your data but also the timing of the process. Look, this is just a front screen. So when you open FairValue Pro, you'll come up here. This just says it's job. Because it's in bright green, that means that job is open. You'll see up the top screen, you'll see your logo and which client that it is. This is the Government of Vanuatu and the Education Department. And down the left-hand side, there's a menu bar. So there's an administration area where you will be able to set up multiple users and provide them with different roles or different access. So some people will be an administrator, some people will just be data collectors, those sorts of things. There's an area there to establish the asset hierarchy, customize data, establish the financial reporting hierarchy, establish your general assumptions, establish the jobs and the key data, and then obviously a range of different reports. They will just expand out based on an up and down arrow. So in the case of the asset hierarchy, for example, you can see that we break the hierarchy up into the asset class, asset type, subtype, what the component's going to be, component type and component subtype. And this gives you great flexibility so that you can structure your asset register however you want, and even within an asset class you can have different components for different asset types without having to have the same standard componentization. Probably not so important for roads or buildings, but when you get into things like active assets in water and sewer plants or into property, plant and equipment or other structures like swimming pools versus tennis courts, you need that flexibility. At the asset level, you can assign a whole range of different attributes that you want to capture. Also in terms of the whole of asset assessment, so assessing for like say functionality, capacity, utilization, obsolescence, and then for each of those components you can also specify whatever characteristics that you want to capture. So the data that you set up in here is fully tailored for your own entity by yourselves. It has no direct impact on the valuation per se, but it provides an ability that you can use this system also as a data collection process, as a mobile, design your own mobile data collection. We also set up a financial asset hierarchy, so basically whereabouts in your financial statements are these figures going to end up in terms of which asset class under the movements reg. If you want a subclass, you can go to that level, and also which is your fair value measurement class. Having done that, you would normally then set up what's called your assumptions or your framework. This includes what we call the valuation profiles in terms of how you're going to value the asset. You can record some high-level assumptions if you've done some high-level research on unit rates or useful lives, maybe put your asset management plan in there. There'll be asset level assumptions, and they'll be split into general assumptions like unit rates and indices, apportionment assumptions if you're using the apportionment method of valuation, and insurance assumptions as well. So for a council, not only will you be able to run and produce your own building valuations, but you can also produce your own insurance valuations to support your insurance premiums. Obviously component level assumptions as well, particularly your depreciation assumptions. Once you've set a job up, you end up then bringing your assets in, and you'll have an asset register which will list out your assets with a unique asset ID and information around obviously the asset class, asset name, location, all those sorts of wonderful things. And you can either view them or edit them depending upon what your role is. And like all of these sort of tabular formats in SQL these days, you can move columns around, you can filter on them, you know, you can find your data pretty quickly. This is just a snapshot of what an asset record or the bottom part of what an asset record looks like. So you can see up here we record details that are of information driving the valuation, particularly in terms of, you know, is it an asset to be revalued? Is it below the revaluation threshold? Are you revaluing it on fair value, or are you doing it on a historical cost or index historical cost method? Is it controlled for financial reporting purposes? So why this is here is that sometimes entities have assets that they want valued, but they don't control them. So it could be an asset controlled by Main Roads. It could perhaps be a clubhouse or something run by the Scouts or the soccer club, which is on your property, but you want a valuation to make sure they've got insurance, but you don't want it to come up in your financial statements. Obviously, there's some information there around is it held for sale or not, because that drives your depreciation, whether you do it or not. You also have some information around have you inspected it, does it need to be inspected, etc. There is obviously inventory data collected. So we collect data on the attributes, we can take photos, through the GPS we can do a Google map, and you record your dimensions. Likewise, for the components themselves, for each of the components we record a whole heap of data around, for example, the apportionment, the condition score, etc. So depending upon how you've driven your hierarchy, once you update this, it will auto-populate what your components are, so that whoever's going out in the field and doing your data collection, it's sitting there. Like I said before, all this information which is produced in what we call a list view, like this data spreadsheet tabular format, any of that can be imported and exported very quickly to Excel. So once you've collected all your data and you've basically hit the revaluation key, you end up with a revaluation. So the revaluations will be at a component level. It will give you, for each component, obviously your gross, your accumulated, your fair value, some stats, depreciation expense, and it will also give you, you can't see it on the screen unfortunately, but further out to the right, all those same details for the short life part of the asset as well as the long life part of the asset. And then all those component data are added together to give you a total valuation for that particular asset. Okay, there are obviously a range of reports that you can produce out of the system. So there are a range of administrative reports and some general reports. So for example, for the valuation, you can produce the valuation at an asset class level, asset level, and component level. You can also produce a report with all your replacement costs, and you can do some analytical reports, and I'll show you one of them later. There's also a range of validation reports. So again, this is particularly for your auditors. So because this is a cloud-based system, not only do you have access to it online, but also you can provide access to your auditors so that they can do their audits from their office. So there are validations that check a whole heap of stuff at the asset level as well as the component level. And there are also a range of special reports, including a stratification report, and the key one at the moment is methodology report, which basically is what your auditor is chasing, which outlines all your details of your methodology, all your inputs, all your algorithms, how that's all done, and provides quantitative disclosures that you can then use in your AASB 13 disclosures. These are just some snapshots from the methodology report. So you can see, for example, for your different asset classes, you'll get a summary of by the asset type, within the asset class, the different asset type, the number of those different types, their financial figures, etc., and a understanding of how material they are within the portfolio. For your quantitative disclosures, for your different asset types and subtypes, you'll get your range of unit rates in terms of your minimum, maximum, and your average, and you'll also get, for the assets that exist in your system, the actual depreciation assumptions that were applied. So for an audit perspective, instead of having to go through a whole range of assumptions and work out whether those assumptions were actually applied, this will spit out the system so the auditor knows exactly, well, these were the assumptions actually used. This is an example of one of the analytical reports. So this is it's like a huge pivot table, and basically you can customize this by moving different fields around. But in this case here, I've just produced it by asset class based on a condition score of 0 to 5 to give me the number of assets, the proportion by the number of assets, the total gross value and proportion by the gross value, and the average gross value. So you can get an idea of the general condition of your portfolio and where things are tracking. One of the big features I'm working on at the moment, unfortunately it's not released, but it will be a couple of months away, and this will be a huge boon, particularly for the financial accountants who have to do the financial statements. We're going to produce the financial reporting figures, so that if you understand this diagram down the right-hand side, one of the issues we have is that this green line represents a valuation done at the end of the financial year. So when you get a valuation done and you ask for depreciation figures, the relevant depreciation figures are estimates for the next financial year. So the issue is that when you're doing your financial statements, the valuation is at the end of the year, but your depreciation figures are based effectively on the valuation at the beginning of the year, plus the assumptions that relate to that, plus any additions or deletions during the year. So basically we've built a process into the system, or we're building it, that will allow you to not only produce your valuation, but also produce your depreciation figure, automatically produce your movements reconciliation, as well as list out your part disposal journals and your revaluation journals. Part disposals is actually a really difficult thing. Technically under the standard, that if I've got a short life part of a component and I've done some renewal, then technically I have to dispose of that part that was replaced. Therefore, if I had an asset, a short life asset written down to $200, and on the first day of the financial year I spend $100 to renew it, then technically I have to write off that $200 to my P&L as a loss on disposal. And it's a very complex process, but we've built the logic within the system to automatically produce these now. And all the reports will come out at either an asset class level, asset level, or component level. So I'll just give you an example, and this is not the report from FairValue Pro, but this is just a worksheet to help understand the complexity of the transactions. So for example here, we've got an asset which is a part renewal, then full disposal after we've impaired it down at the end of the year. So you can see we started an asset, 10 grand split, 4 grand for the short life part, 6 grand for the long life part. As at the beginning of the year, the short life part was down to $400 and the long life part down to $2,400, giving a overall opening balance of that asset, of that component, at $2,800. We spent $100 on renewal, and as a consequence of that, that represents a part disposal, which means that this $400 less the depreciation expense up to the point of the renewal has to be physically disposed. But because I've also come along later on the year and fully disposed the asset, I've taken the option of doing a impairment adjustment prior to the disposal, because if I didn't do that, this $2,484 would have ended up as part of my loss on disposal. So one of the beauties is, because of this process, you'll be able to produce your figures. Having looked at that figures, you can sit back and go, oh, I should have done a impairment adjustment prior to disposal. You can go back, put that back into the system, and then calculate what the figures are going to be. and the system will enable you to automatically generate what journals you need to process. Another example here, this is just an asset where I spent $500 on CapEx. It was near disposal. Therefore, I literally got to do a part disposal of this asset, write off the $200 less depreciation to date, etc. And then calculate what my revaluation adjustment is. So, I mean, I don't expect you to understand this quickly, but at the end of the day, what I'm getting to is to do your movements reconciliation is quite complex. You have to take your opening balances, split between short life and long life. You have to look at any CapEx or acquisitions during the year. So that could be renewal, could be upgrade, it could be purchases, or it could be donated assets or assets acquired below fair value. You also then have to enable any impairment adjustments. But once we've got that information in, because we've got the opening valuation from FairValue Pro and we've got the closing value from FairValue Pro, we can actually calculate all that complex stuff automatically to enable you to produce your final movements reconciliation note for your financial statements. So again, it's not there quite yet, but it's not too far away. And I think once that hits, entities will have a system that not only you can produce your own valuations, but you can also then take total control and make the preparation of your financial statements around the asset accounting stuff pretty easy. So I've rushed through that. Any questions or comments? No? You there, Jess?
Yep.
Yep.
All good, I think.
All good?
David, it's Sharon from YAS. Can you hear me?
Sharon?
Just have a question around the actual values. So for the unit rates, when it's doing the calculation on the values, where are they coming from? Are they coming from information we have on previous construction?
Yeah, look, so there's lots of ways that you can go around unit rates. So if I was using FairValue Pro, what I would be saying is based on your hierarchy and based on your experience of recent projects, you would set unit rates based on the different asset types and subtypes, basically. Having said that, sometimes a valuer might look at an individual asset and go, it's unique in some way, and determine a unit rate specifically for that asset. So unit rates also can be determined differently depending upon the nature of the asset. So if I was valuing a building, normally what you would do is you'd say there are different areas within the building that have different unit rates. So you might have the main part of the building has a different unit rate to the veranda and a different unit rate to, I don't know, say the flash foyer. So you basically calculate a value at the total whole of building level, and then you apportion it out across the different components. Whereas if I was valuing a road, I would be looking at the unit rate construction costs for the formation as totally independently as the unit rates for pavement and seal, because they're going to vary depending upon the topography, basically, and the design. I'm not sure that's quite answered your question, but...
Well, I guess the difficulty for a lot of us is that we don't have, particularly for some of our longer dated assets, wouldn't necessarily have a lot of historical information around construction costs. So we wouldn't have access to unit rates, and I think it would be a lot of work for us to go and develop or have the engineers go and quote all of those.
Yeah, one of the beauties of this process is for councils like yourself, probably the easiest solution is if so APV, what we're doing is we're delivering all our valuations on this software at the moment. So all the new 2017 valuations are coming through. So all the councils will have online access. So once we've produced our valuation, all that information around unit rates, etc., is already in the system. So 12 months down the track, you can then make a decision yourself to say, oh, I'm happy with the process, just keep APV doing the revaluations. Or you might say, now that we've got all that set up, I'm happy to take that file over myself and do my own revaluation because I've already got unit rates established in there. All I need to do is apply an index.
Yeah.
And then after 3 or 4 years, by then your own people should have enough capability to be able to determine their own unit rates. Or it might be that you're happy to do the work yourself, except you might say engage, could be us, it could be someone else, to say we just want you to do a review of unit rates so that we can feed that into FairValue Pro.
Right.
There's lots of options. It really comes down to how much money do you want to spend or save. You know, obviously the more work that you guys can do yourself, like using software, if you're doing 100% using the software, that is going to be the cheapest way to do valuations and give you total control. But it also means that you've got to take responsibility around unit rates and those sorts of things. At the other end of the extreme, you would bring a firm like us in to do the whole lot, and we would deliver it to you and charge you a professional fee. But we will give you online access to FairValue Pro for free, but it will be a view access, not an edit access. In between, you might say, well, we'll subscribe in our own right, but only use us to, you know, update the unit rates for you. And that's it.
Yeah, right. Okay.
Or maybe come in and do a peer review of what you've done, just to give you comfort that all's okay.
Yeah, sure. I mean, and just historically, I know that unit rate methodology, the methodology around us determining unit rates has always been questioned by auditors, particularly when there's any challenges. And so I guess it's not like us just going and saying, well, we estimate that it's going to cost this without being able to demonstrate to the auditors where we got that number from.
Yeah, that's where you utilise our expertise. Because the thing with us too is we've got access to all the different councils we've done work on, so we know what unit rates are available. We've got our own database, and moving forward with FairValue Pro, once you've got say 20 councils on FairValue Pro, you've suddenly got a central database of all the unit rates for those 20 councils, which makes it very easy to justify and benchmark unit rates and provide the relevant support to audit.
Yeah, for you though, we wouldn't have access to everybody else's unit rates, would we?
Oh,
if we bought
no,
this?
you won't. No, you won't. But having said that, there's nothing stopping us providing like a summary table to our clients to give them, just like a Rawlinson's or a Cordell's, to basically give them access to high-level data that they could use as a reasonableness check.
Sure. Yep.
Yep. So, look, I don't expect councils to suddenly just jump on this and come on board straight away. But I think what will happen is, I know there's already about 10 or 15 councils that keep ringing us saying, when are we going to be able to take it over ourselves? I'm not in a position to release it publicly, in that way until we've sorted a few little issues out, because it's like all new software. There's a couple of little bugs that you come across that you don't realise. So until I've sorted all them out, it won't be commercially available to subscribe to by a council. But I think that's probably going to happen, probably July, I suspect. So it's not too far away.
Okay.
Yep. Anyone else got a query? Or any thoughts or comments?
David, it's Sharon again. Have you set this up for any councils yet? Do you know what the upfront work is to get it up and running?
Oh, yeah, we've probably got at the moment, I would suggest about 30 councils across Australia on it, maybe even more. So from our process, we're changing our own processes, obviously, a little bit. We've changed our hierarchy and a few other bits and pieces, but the process for us is the same as it always has been, effectively. Now, for an entity to start from absolute scratch, it comes back to the quality of your data and the quality of your understanding of your portfolio. Now, for say, I'll give you a good example. We've just done a project for 5 of the water entities in northern New South Wales. I did a joint tender. So this was Ballina, Clarence Valley, Rouse Water, Kyogle, and I'm missing someone. Anyway, basically we went through a process where we did a joint day workshop to work through methodology and hierarchy. And then I spent another probably half a day with each of them just to confirm hierarchy and those sorts of things. And then based on that, we uploaded the framework into FairValue Pro, and then obviously collected the data and loaded it into the system. So it doesn't have to be a huge exercise, but it's as difficult or as complex as you want to make it. I know it's not a good answer, but
it can be imported through Excel or something like that.
Oh, everything is exported up through Excel.
Yeah.
So once you've done your work to set your framework up in terms of your hierarchy, your attributes, all that sort of stuff, it literally is done in Excel, and you suck it up into the system through an import tool. And the import tool tells you, does a process log and tells you if it's failed for some reason because you've got data which is not correct or something like that.
Yeah.
Right. So, I mean, for us, when we set a file up, we obviously have our defaults. The woe to go time from a new job to being set up ready to collect the data is literally about 2 hours.
Right.
That's because we've done the work in creating the framework and all the rest of it. And for most of our clients, I would suspect even if a council that wanted to do it themselves from scratch, they would probably be unlikely to move from our defaults because they'll look at it and go, this is fine, it fits.
Yeah, okay.
Yep. I think we might be done, Jess.
Yeah. I think we're all good.
Oh, look, if anyone's got any queries later, you're more than welcome to email me or ring me and have a chat. And if you're down at the Hunter Valley in a couple of weeks, pop by and see us, and I'll show you the product in real life. And there's a few other features that I haven't talked about, but you'll see them down at the Hunter Valley. Cool.
Thanks for that.
Okay, well, thank you very much.
Thanks, David.
Okay.
Thanks, David.
Okay, thanks, Anne. Bye.